welcome. Good morning. You're watching India Market Open, where Niraj and me will take you through all the action for the week ahead. We'll hear you for trade this morning. Asian markets are quiet, but was this morning. Asian markets are quiet, but was a solid handover from last week's trade on D Street.
Yeah, I mean, we had a splendid move on Friday. Hey, who won the bet?
It was never about Friday, Niraj. It was only about Thursday.
Okay, fair call. But or Wednesday rather, because Thursday
was the holiday.
But yeah, I mean, good handover for sure. And Samina, you like? I mean, one would like that because now that the earnings season is over, we are dependent on global cues. But independent of what global markets do, if we have a good move, then that's music to the ears. But yeah, important week. There is a bunch of global activity lined up for sure.
For sure, and you've also got a lot lined up locally. So the primary markets have been very active for the last couple of months, and I think that focus will remain this week as well. You've got a blockbuster listing that the street is eyeing. So we'll take you through all that and more as we gear you up for today and we gear you up for the week ahead. But first up, a check on what's happening across Asia. Asian markets are taking a breather after last week's fantastic rally. Inflation data from some parts of Asia is what the street is eyeing. There's no major sell-off for Asian markets. It's quietish, barring China, of course. And China, remember, is in a world of its own. So it really doesn't move in tandem with the rest of the world. Chinese markets are looking good, but the rest of Asia is having a quiet morning. Japan also trades with a slight negative bias. Well, let's tell you what the markets are eyeing. You've got the central bank release this week. That is, of course, the FOMC minutes. You've got Bank of Korea's rate decision and minutes of the Reserve Bank of Australia's August meeting as well. Data came in from Japan just a few minutes ago, which is the core machinery orders in Japan, which have actually declined 1.7% on year in June, surpassing expectations of what economists had expected. So, surprising economists, rather. The economists were expecting an uptick in manufacturing orders, but there's actually been a decline. Maybe the markets are reacting to that across Japan. But let's take you through what else is happening. Wall Street had a pretty strong run in Friday's trade. US stocks rose sharply as investors closed out the best week of 2024. All three indexes recorded their biggest weekly percentage gains since October 2023. The S&P and the Nasdaq had their first weekly gain in over 5 weeks, and the Fed rate cut and likely soft landing is what's fueling traders across world equity markets. 78% of Wall Street earnings have beaten street expectations, and that's the other positive trigger for those markets. So, Niraj, you've had expectations of a soft landing. We saw data coming in from Wall Street that was rather promising, as opposed to what that fear that the markets were taken over by in the early part of August. So soft landing, a Fed rate cut, and almost 80% of Wall Street earnings have beaten expectations. So all in all, it's corporate doing well and economy also in a good place. And I think that's what is driving risk on trade for world equity markets.
Yeah, and like we've been saying, Samina, if we are closer to the Fed rate cut cycle, and the Fed has been the big determinant, there is no reason to suddenly turn otherwise. There are some chinks out there. So foreign investors pulling about a record money from China last quarter, 15 billion, and that leaves that market in tatters, if you will, or the US consumer as well, because apparently if we get a chance to speak to a global guy very shortly, we'll talk about that as well, that how the US consumer is spending a lot more on credit cards. So wonder if that wonder if that brings about a problem. But for all markets, the panacea is a Fed rate cut. And I think as long as that stays okay, it's fine. But maybe while we'll talk about global in a bit, just focus a bit on the trade setup from a local perspective.
Should we just take our viewers to what is expected and why we are making this week to be such an important week for participants? And like Niraj indicated, earnings season is now behind us. So what is going to happen to India is that we'll be driven largely by our global peers. When we talk about global peers, the big focus is the Fed chief, and he seems to be the biggest driver of global equity markets. Couple of factors and events to watch out for. All eyes will be on the FOMC minutes that will be released this week. You've also got the Jackson Hole Symposium, where the US Fed chief will be talking to global central bankers about the rate cut trajectory. So it's all about expectation setting. And given that this is only a month away from the much anticipated Fed meet, it gains even more significance. You've also got weekly jobs data and US home sales data that will be coming out of the US. You've got inflation from Europe and Japan that Asian traders will be watching out for closely. So in terms of global events, Niraj, you've got jobs and you've got the Fed chief will drive markets again.
Yeah, and Indians will be happy, Samina, that everything else notwithstanding, gold prices are above that $2,500 per troy ounce mark for the first time. So in that basis, at least,
that's what worries me, though, Niraj. If gold is higher, it's some sort of risk of coming back on the street.
Yeah, but
it's very rare that equities and gold move up at the same time. Right?
Yeah, just that somehow some of these correlations post-COVID have just completely gone away. Yeah. So oil lower, gold higher, a lot of things to watch out for. But the trade setup for the day today, really, and the direction for the index or the Nifty is certainly looking up, even if the broader markets are relatively choppy. And if you just look at what's happened last week, you will probably see this sign of this as well. But Friday was everything moving up higher, including the bank Nifty. And after such a long time, you've seen HDFC Bank leading the charge higher. The only problem, and as I was looking at Dr. C. K. Narayan's column, which he writes for us every weekend, and viewers, by the way, if you haven't read it, it's there on our website. It's a wonderful read. You should try and log in and try and read what Dr. C. K. Narayan has to say about the week ahead. But just look at what happened in Friday. All-round market, only 2 stocks or 3 stocks in the red, but the ones which led the charge, HDFC Bank, ICICI Bank and Nifty IT, which was the best performing index the whole of last week. So banks have done well, but there are multiple pockets of resistance, and therefore you don't know if it hits those air pockets and comes off, the bank Nifty particular, and therefore that kind of throttles the rally a little bit. But speaking of throttling the rally, and I don't know if Samina thinks about it, and then we'll of course do the City Equity Strategy note as well, but shipbuilding stocks starting to see pressure after a really long time, and chartists that I read notes of seem to suggest that maybe there are more downsides here. So remember, this is a pocket that has always in the last 24 months got bought into. Will it be the same thing this time around, or will there be some serious pressure? Look at all of those stocks in the last 1 month, particularly in the last 1 week, and there has been some pressure there. So let's wait and watch if there is some downside.
And I think for good reason, right? A lot of the good news is already priced in. So
and the results weren't great.
They weren't great. I mean, we saw what happened with the likes of Bharat Dynamics, very disappointing earnings quarter on quarter. You have companies like HAL where they're not getting delivery of the likes of Airbus. So, and they've run up so significantly, like we said. But just a quick detour. We'll do a quick check with Arvind Sanger on what's happening with global equity markets and what the outlook is going ahead before we come back into local cues. Arvind, good morning. Thank you very much for joining us.
Good morning.
It's been a pretty solid week for global equity markets. Best week of 2024 is what I believe Wall Street witnessed. As we go into this week, you've got a couple of big events lined up. What are you expecting these events to do for traders? Will they be driving markets? Will the Fed chief be sort of giving us any direction on rate cuts? And tell us what we already don't know in that sense.
Well, look, we've gone through some pretty turbulent weeks, down and then up, right? Because first we got some unemployment numbers which suggested that maybe the economy is at risk of going into recession. Then we got some other numbers which suggested that CPI is coming, inflation is coming down, and maybe the unemployment situation is not that bad. And so we've had this mixed data, and we went from where the market worried that the Fed was going to have to do an emergency rate cut to where now and maybe go 50 basis points by September to now, it's either 25 or 50. So to the extent that there is a Jackson Hole meeting of, U.S. federal chairman and other officials, central bank officials, I think people will be looking for signs of how nervous or how willing to commit to what they're going to do in the September meeting, because nothing is happening before the Fed meeting in September. So we'll all be looking for signs of how clear a picture the Fed gives of how close they are and how aggressive they're willing to be on that front. So I think it'll be a useful week. But I think the big news is really inflation is coming down, and economy doesn't seem to be tipping into any kind of a problem. But we have data which will come out not this week, but in the next few weeks that will give us a better picture than just the words of the Fed. So I think it's both data and Fed that are important going forward.
Arvind, now let's lay this out, right? From 2020, we've seen the markets move pretty much in one direction, which has been upward, on expectation of a rate cut coming in from the Fed. If you are a investor, how would you position your portfolio? Do you feel like this is buy the rumors, sell the news, which means come September 18th, markets get the much anticipated rate cut and then actually sell off? Because historically what we see is you usually buy into the news, and when the news comes through, you usually take profits off the table. Do you feel like that's the sort of scenario we are setting ourselves up for?
I think from a trading standpoint, absolutely. That, the anticipation of the Fed rate cuts is probably going to be more exciting than the rate cuts themselves, which, if they end up being 25 basis points, if the market's reaction maybe to shrug its shoulders and say big deal, and therefore take some profits. But I think the more important, in my opinion, information is going to continue to be, are we in for a soft landing? Are we in for a Goldilocks? Or is there still, economic turbulence ahead? And that, the rate cuts seems to have become the be-all and end-all of market focus. But I think the economic outlook, if it continues to be benign and then a rate cut comes, we get a little bit of a profit taking, but then I think the markets continue to work in a positive direction. If, on the other hand, while the rate cuts come, the economic turbulence increases, then the profit taking could be more severe. So I think in some senses we are also slightly data dependent, and it's not just about Fed rate cuts.
Okay, Arvind, good evening. Niraj here. The other question is, because you look at India also fairly out the EM space and India within that, anything around the earnings season or the budget enthused you or disappointed you? Because most notes which have come out have said that the earnings was maybe slightly subpar, but it was expected because it was the election season. And while there is no upward revision to earnings for FY25, the longer term trajectory looks okay. How are you thinking about it?
Yeah, I think first of all, the budget was largely a non-event. There wasn't anything dramatically good or bad. I think it showed fiscal prudence, which was good. But there wasn't anything earth-shaking over there, so that's behind us. And I think in terms of the earnings, you're right that this quarter has not been, a stellar quarter, and it doesn't change the long-term story. It just, doesn't provide fresh new catalysts. So I think we'll just have to wait and watch now that the election is well behind us, and we get a more normal September quarter. We should hopefully continue to see the kind of earnings growth that we've all been expecting, and I think the economy is on a solid footing. I don't think it's surprising on the upside. I think the biggest problem for us in the Indian market remains valuations versus growth, right? I mean, companies growing at 15-20% are trading at 40-50 times earnings. So it's not an inexpensive market, but I guess it remains one of the only games in town, so to speak, in terms of emerging markets. So in that sense, I don't see any fly in the ointment in terms of the upward kind of direction. It is going to be, for us at least, value dependent and trying to find opportunities where there is some reasonable valuation to buy that growth.
Which is good to know. No fly in the ointment is always positive. Just one quick follow-up there, Arvind. Geopolitics, because it's become an embedded part of our investing lives, if you will, or human lives, sadly, too. But a lot of saber rattling out there in the Middle East ahead of, hopefully, a ceasefire. Do you think that will have a meaningful impact on risk assets or not quite? Either direction.
Well, it could. And I'm not very optimistic that a ceasefire is imminent, but, the countries that are trying to bring about a ceasefire, obviously U.S., Qatar, Egypt, are all hoping that something will happen. But I think the big risk lies if things get out of control, if Iran does something and Israel feels compelled to retaliate, and things get out of control and they start destroying, energy infrastructure, and that could cause energy prices to spike, and that could cause, markets to take a hit. But I think the central case so far has proved to be that neither the Ukraine-Russia situation nor the Israel-Gaza Middle East situation has upset global. I think the Russia-Ukraine did in 2022, but most of that has stabilized as they've rerouted their commodity supply chains, and Israel-Gaza has been very much self-contained to that region. So to the extent that this geopolitics doesn't spill over into more of a regional problem, we're okay. But, we cannot assume that the way it's been is the way it'll be. So it's definitely worth keeping an eye on. But as long as it remains contained regionally, I think the markets will continue to look through that.
Arvind, in April, you were rather constructive on HDFC Bank. Friday, the big mover in trade was HDFC Bank. Are you still constructive on HDFC Bank, particularly in any other banks that you're buying into in India?
Well, I certainly like HDFC Bank as a high-quality play, along with some of the other private sector banks. But I think this was the one that seemed to have valuation that had really dislocated, and that's what made it interesting to us. I would say that in terms of the banks, not so much the banks, but some of the NBFCs have gotten interesting because they have lagged. And again, I'm not talking about someone like a Bajaj Finance, which has always been a market favorite, but there are other NBFCs that are at attractive valuations, which could be a bit of a turnaround story. So we are looking at some of those situations, but those are more mid-cap oriented companies. And so, yes, we do find opportunities in the financials.
Also, real estate. There were a few stocks in the realty pack that you owned or were looking to add to your portfolio. You want to help us with what you like in the real estate space? Anything specific for our viewers?
Well, I would say that Mumbai real estate is solid. NCR is turning around. So, a company like DLF, which has very broad exposure to both commercial, but more importantly, residential, and NCR is always a high quality way to play that recovery. The Bangalore, look, real estate is very regional, right? There's a national trend that we are probably in a rate cutting cycle, and we still have a strong demand. And then you have to look at which regions are the valuations versus the risk reward attractive. And I would say NCR and Mumbai are slightly more attractive just because the Bangalore ones have had a big move. The Brigades of the world and others are slightly, ahead of where some of the NCR or Mumbai players are.
Indeed, Arvind, we'd have loved to chat with you longer and get some more perspective on what looks good and what doesn't in the Indian markets. But yes, Bombay, NCR are the two markets where there's a little better, there's more valuation comfort as compared to some of those Bangalore real estate names. And NBFCs is what Arvind likes to. Have a good weekend, whatever little is left of it, and we'll see you next week or sooner than later. Well, in terms of a quick update on the FI numbers as well, Friday was one day when the market saw participation come in from foreign investors. They bought shares worth 767 crores on Friday. But for the week, they've sold to the tune of 8,616 crores. And the total outflow for the month of August also came in at 28,977 crores from foreign investors. DIs continue to remain buyers, and they've been buyers on Friday, they've been buyers in the last week, and they've been buyers all through August as well. What stood out, though, was while equity market has seen foreign outflows, it's the debt market that has actually seen foreign inflows all through the month of August. So that's the setup that we have this morning, but there will be a handful of stocks. Earnings season is now behind us. It's going to be largely news that will be driving counters in trade. My top one on the list this morning is Scott's Copata. They've submitted a rather large and aggressive investment plan for UP, where they're looking to acquire land and set up a greenfield facility. They're looking to invest 4,500 crores. Now, if UP was a stock, this would be a big positive for Uttar Pradesh, but also in terms of Scott's big greenfield expansion plans. They're eyeing an annual capacity production at 10,000 crores when the plant is at full capacity. We still don't have a sense of timelines. We will try and connect with the management of Scott through the day or through the week to get a better understanding of what this 4,500 crore expansion plan is all about. Adani Enterprise, they've approved raising up to 800 crores via NCDs. They will issue NCDs amounting to 400 crores with an option to retain oversubscription to the tune of about 400 additional crores. The stock was, remember, a big move in terms of Friday's trade as well. The euphoria on the stock may continue into trade today as well. Another one that's we caught our attention from Friday evening was Maruti Suzuki. The management has indicated that their earnings for the next quarter will have a one-time impact of 850 crores on back of indexation being removed on debt funds. Remember, indexation on debt funds was removed in the previous year's budget, but the timelines and the holding period of some of these debt funds by treasuries of large companies is varied. In the case of Maruti, they will be addressing or taking a hit of 850 crores in the next quarter earnings. So, of course, setting themselves up, expectation management is largely what they're doing.
Yeah, well, and it'll be interesting to see if it's very difficult to decipher what some of the other companies' hits will be. So
especially because we don't know timelines of when these investments were made, right?
Yeah, or what is the nature of the investments that they've done too? And yeah, but Samina is right. The timeline is the key thing. So yes, good to research. Don't know how much of a accurate call can be made unless the company itself releases the data. So bear that in mind. But let's talk about some other stocks to monitor in the session today. So Genus Power could be interesting. Its arm has gotten 3 orders worth 2,926 crores to supply and install 37.5 lakh smart prepaid meters. So this prepaid meters business, so smart meters business continues to flourish. One more order for this company. Let's wait and watch how this one does in the session today. So keep an eye out for Genus Power. That's the first one on my radar. A couple of brokerage notes which seemed interesting. And Voltas, I think the commentary from the brokerages is mixed. So Kotak is a sell. Jefferies is positive. Nomura is very positive. I've chosen Nomura. So Nomura says that they have a buy, of course, and the target price has been raised to 1857 from 1511. For context, the current price is 1535. Why do they like it? They say Q1 beat. So Q1 was a beat according to them and was led by the projects business. The company is focusing on expanding leadership in the AC segment, which is the unitary cooling products business. And they have raised the UCP revenue growth for Voltas to 30% YOY in FY25. And their EPS estimates are up by about 10% for FY25 and 26. With that kind of a beat, no surprise that they've raised the target price by nearly 15-18% on Voltas. So watch out for Voltas in the session today. Remember, as I said, Kotak has a sell. Jefferies is also buoyant there. So mixed bag there. But Voltas certainly active. And the third one on my list is Shriram Finance. I thought that HSBC note was very interesting with the comments that they've put out. So they are saying they were buy, of course, the target price being raised to 3,600 from 3,340. They say it's competitively well positioned amongst NBFCs, and the company is in its most convincing operating period in over a decade. And they say the stock still retains several re-rating triggers at the current valuations. So watch out for Shriram Finance, watch out for Voltas on brokerage notes.
Yeah, I'm just going to add a few to your list. Hindustan Zinc, it's lost 15% last week, and if you thought Friday's sell-off was the last leg of that on back of Vedanta's stake sale, you're in for a surprise. Some more pressure on Vedanta on Hindustan Zinc cannot be rolled out. Vedanta, we believe, is to exercise its oversubscription option for an additional 0.29% stake in the ongoing OFS. Post this, Vedanta's total OFS represents 1.51% of the company's total stake sales. So if you've held this stock and you're hoping that a little bit of sanity returns back to the counter, today may not be that day. Along with that, a couple of smaller ones. Actually, let's talk about CDSL. So while Hindustan Zinc was your top loser, CDSL had a very solid run on Friday. It was up nearly 9% as we see it. It's up 13% in the last week's trade. This is because they, remember, declared a bonus issue of 1:1, and the cutoff date, the record date for this has been fixed as 24th of August. So that is why CDSL was a big mover. The buying could continue into the stock this week as well. Another one, I don't know if you caught Street 2, but PVR as well had a good run on Friday, 5% higher. They managed to make 170 crores of revenue on back of Street 2. So I think that stock smaller, but usually reacts often to, Bollywood in that sense.
Yeah, most certainly. And let's wait and watch, because this is not necessarily the peak season for movies.
I don't know. Do we have a peak season for movies with Netflix around?
Yeah, but that's true. But I thought box office releases perk up during the festive season, right?
Is that right?
The Diwali
Okay.
release, etc., and the Eid release. So
this one is a small budget movie from the look of it, but we'll try and connect to PVR to understand what this really means with the numbers. The stock had a field day on Friday, to say the least.
Yeah, most certainly. And then some technicals, if you will, and we'll ask our technical experts about this, but some price volume buzzers and maybe stocks that you can just keep at the back of your mind. No news here per se, or maybe there's news, but I'm not presenting them for the news, but for the price action. Pokarna, highest weekly volumes and some serious price momentum seen all through last week. EPL, again, highest weekly volumes and some significant price momentum. The third one is the best, Triveni Turbines. Again, highest weekly volumes. Triveni Turbines is up for 8 straight sessions. So this stock is doing well too. So that's the third one. Keep this in mind. And last but not the least, Kitex Garments, a stock which became famous and then became infamous. It's come back from the brink, if you will, and it's got a decadal breakout accompanied with the best weekly volumes. I mean, if we could pull up the chart to 10 years, you will see that Kitex Garments has finally eclipsed a price that it last hit 10 years ago. So from a technical perspective, could be very, very interesting. Let's wait and watch if Kitex has some in store. So we'll ask our technical experts about this. So just one more addition. There's a note that came in from IDBI Capital which highlighted major purchases and major exits by mutual funds in the month of July. These 4 stocks had some serious exits by mutual funds in the month of July. You may want to watch out for them if indeed you have them in your portfolios. Do research them. Maybe the mutual funds are wrong, maybe you are right. I'm not saying what to do with these stocks, but mutual funds have exited these stocks, so keep them at the back of your mind.
Also, just a quick one. It's been a good summer, and if those numbers are anything to go by, GMR Airport could be one stock to track. July's air traffic numbers have actually come in pretty good. 7% year-on-year increase in total passenger traffic in the month of July. Domestic traffic, passenger traffic was also up 7.1%. International travel was up about 9.3%, and aircraft movement was up 6%. So if you track the aviation space, remember the summer season is and usually sees a lot more travel than most other parts or most other times of the year, largely on back of the heat and of course summer holidays for kids. That's reflective on those passenger snail numbers, and GMR Airports will be reacting positively to that story as well. But one quick check on the implied Nifty before we move on to some other important news that we're tracking this morning. Implied Nifty is up 88-90 points. We'll quickly move on to the top story from politics then. The government on Friday announced a major bureaucratic shuffle. Modi government appointed new expenditure, banking, corporate affairs and defense secretaries, among others. I'm now joined by my colleague Sunil Prabhu to tell us more about this development. Sunil, it's over to you. Oh, I believe you've just lost him. But Niraj, I think this is important from a political economy angle, not so much in terms of market impact, but of course we'll try and connect back to Sunil to understand the portfolios and what this really means for the country.
Yeah, I mean, if Sunil can hear us, great, but I'll just get him in moments from now. But this is interesting because there's this development that has happened. There's also the whole talk of some key political allies being brought into the fold as well, which might help on the assembly side. So moves being made on the political side, moves being made on the economic side as well with this shuffle or the reshuffle as the case may be, or shuffle really. Sunil Prabhu is with us. Sunil, good morning to you. Do highlight why do you think this is very important?
Well, as you were rightly pointing out, this is a reshuffle, and a reshuffle in the context because it started off with the new cabinet secretary, Mr. T.V. Somnathan, who was the expenditure secretary, is all set to take over from Sir Rajiv Gauba when he demits office at the end of this month. And it's in that context that the government wanted to have its imprint. These are the nuts and bolts, and these are the people who actually run the ministries. Mr. R.K. Singh, who's become the Secretary of Defense, will get a 2-year tenure, and so he'll be able to ensure in terms of defense procurement, defense preparedness, and everything else. Mr. Manoj Govil, who's the Secretary Department, is the new Secretary Department of Expenditure, comes from the Corporate Affairs. There is Mr. Vivek Joshi has become the Secretary Personnel, and so Mr. Nagaraju has become the Secretary Department of Finance Services. And then, of course, we have a new Secretary in the Corporate Affairs to look at various issues in terms of governance as well as, the entire corporate ministry. So Deepti Gaur Mukherjee will be handling that. So it's in this context that these people will be able to give a sense of direction in the next few days and months. There is also a new, urban development secretary, and these are critical ministries. These are ministries which will help India progress. If there is anything that is lacking, it is in terms of implementation. And I think these new secretaries have their task cut out in terms of getting the job done. Once, of course, they get the political clearance in terms of getting their various sanctions and various ministries to be done. Critical, of course, will be the expenditure secretary, because Mr. T.V. Somnathan has left big shoes to be filled in, especially in terms of the fiscal deficit and how to control government finances.
Okay. Sunil, thanks so much for putting this out for our viewers. Really appreciate your time. We need to slip into a quick break on the note that we might have a brisk start. But what to do in this brisk start? On the FNO side, and then, of course, on specific stocks, both fundamentally and technically, all of that coming up. For now, though, on the other side of the break, Agam Vakil joins in to talk about the derivative space.
Good morning. This is India Market Open. I'm Agam Vakil. We are going to take you through all that's happened in the futures and options space last Friday. It was a great day of trade. We did see the benchmarks advance by around 1.6%, 1.7%. And let's take a look at how things have in fact changed because of that sharp up move last Friday. I'll start off with the Nifty. We did see an up move around 1.6% and a lot of older shorts being unwound. At the moment, of course, the Nifty climbs back above the mark of 24,500. That is a big takeaway. When it comes to the Bank Nifty, again, the unwinding was a lot sharper. So 13% decline in open interest even as the index advances by around 1.6%. The Bank Nifty climbing above the mark of 50,500 and closing above there. So that is also the other important point out there. Now, as we move into new week, in terms of the Nifty, we're watching out for 25,000 call as the one with the maximum open interest at the moment, and I reckon that that will be a little bit of a resistance zone. On the lower end, we continue to see traction around 24,300, 400 and thereabout in terms of writing of puts. But as far as stocks are concerned, it was a great day of trade. We did see a lot of longs in Balram Puccini, emphasis on Ashok Leyland, and of course in terms of stocks which are unwinding, a bout of short covering for names like Piramal Enterprises, Apollo Hospital, as well as PFC. So plenty of positive traction when it comes to stocks, but let's get in an expert opinion here as to what we can do with respect to current markets. So we have Milan Vaishnav of Gemstone Equity who's joining us on the show. Milan, good morning. Thank you so much for joining in. Let's start off with your view on the benchmarks, and I believe that you also have a delta neutral strategy here. What's the way forward?
Yes, Adam. Well, good morning. So far as the markets are concerned, yes, we had a wonderful surge on Friday, but I believe that was more led by very sharp short covering. Now, because of that short covering, we might see that short covering getting a bit extended today as well, as we see that Nifty may open on a decently positive note, so to say. But that being said, if we take a look at the overall pattern analysis on the daily chart, a couple of weeks back, Nifty had ended up violating a trend line, a rising trend line support, and that rising trend line might end up acting as a resistance when we see a pullback. Now, because of the rising nature of the trend line, we might see that resistance level inching higher with each passing day. But I believe that 24,600 to 700 zone can see Nifty taking a mild breather from the surge that we are seeing right now. Besides that, we have also seen that the supports that were existing in the range of, say, 24,000, 24,100 have been dragged higher towards 24,400. But that being said, I still believe that Nifty will continue to stay in a very broad trading range. But until and unless it takes out the 25,000 level convincingly, we aren't going to see any trending up moves as yet. Secondly, there are two concerns. One concern is that beyond 24,600, 700 strikes, there is little existence of writing of puts. So that has to come in if we have to sustain the higher levels. And secondly, I also see that the market breadth is negatively diverging on the broader Nifty 500 index. So by and large, I believe that the Nifty will still continue to stay in a broad trading range, yes, but with a little bit of an upward bias.
Right. And based on that, Milan, you're selling a strangle at the moment?
Yes, I am selling a strangle. I am selling 29th August expiry 25,000 call and 29th August expiry 24,000 put. The total premium that we will collect would be around 113 rupees. That would be approximately 4% of the expected yield. And as a part of risk management, we will exit if Nifty ends up violating 24,000 or ends up moving past 25,000 levels on the upper side.
All right, so that's short strangle here. But the other stock on your radar, Milan, is HUL. Can you take us through that one as well?
Yes, Hindustan Unilever, it's been under a Bollinger Band squeeze over the past couple of weeks. Now, Bollinger Band squeeze is generally a neutral formation, and one must always wait for the price confirmation. But going by the other lead indicators, I expect this to resolve on the upper side. So I'm going for a call spread. I'll be buying Hindustan Lever August 2760 call and selling 2840 call. Maximum profit potential here would be around 18,585, and the maximum loss that we can suffer is 5415. We will book the profits if Hindustan Lever moves past 2840, and as a protective stop, we will use 2700 level as a potential stop loss for this.
Okay, so there you have it. That's a spread. It's a we'll call spread. As far as HUR is concerned. Well, on that note, thanking Milan for joining us and taking us through his views on the markets, and of course giving us a couple of option structures to work with. With that, it's back to you all.
Very quickly, Agam. So these are really range-bound trades that Milan is recommending. You want to just quickly wrap that up for our viewers?
Yes, absolutely. So at the moment, we are bang in the middle of the range that Milan is working with, and considering we are at 24,500, what he is in fact suggesting to do is that you sell the 25,000 call on the higher end and you sell the 24,000 put on the lower end. Now, assuming that the Nifty continues to trade within this range till the end of 29th August, there is a high likelihood that you could eat the entire premium up. But remember that this is, of course, a strategy which requires selling of options. So one needs to bear in mind that a very sharp up move or a down move could lead you to a potential loss, which is why your stops need to be in place. Or you could alternatively add, your call and put option outside this particular bracket of 24,000 and 25,000, and that would also largely limit your loss. But all in all, given the fact that we don't have too much in terms of triggers with respect to events, at least in the near term, this strategy could potentially hold in terms of making money in terms of probability.
And it's a very wide range. The 1,000-point range has been pretty much sacrosanct for the index over the last couple of weeks at least. 24,000 on the downside, 25,000 on the upside. But like Agam said, any moves either on the upside, so breaking 25,000 or breaking 24,000 on the downside, could lead to losses. But there's a very good chance that the markets in the Nifty will remain in that range. That big event that market participants are vying is not until the 18th of September. So you've got enough time between now and the 29th to play that strategy. Well, that's the call on the Nifty. It's expected to see a gap up this morning on back of global cues. Some markets in Asia are lower. Japan is trading quiet, but China and Hong Kong are having quite the day in early trade. Well, let's go down to stocks now, and Voltas is one interesting one. You've got two contradictory calls coming in from Voltas from two big brokerages. Mahima is standing by with more on that. Mahima, it's Kotak versus Nomura. You want to take our viewers through who's going to win this one?
Right. Samina, so as you rightly mentioned, both the notes are quite contradictory to each other. While Kotak is bearish on Voltas, Nomura is bullish on Voltas. Now, Kotak has maintained sell with a target price of 1,100, which is a downside of almost 28% from Friday's closing. What they're saying is that there's robust volume growth, but the unitary cooling products margins is disappointing. Now, UCP margins are impacted on account of multiple things: discounted sales, higher subvention costs, and rising input and A&P spends as well. What they're saying is that growth in UCPs was as per expectation. However, the margins of 8.6 were below expectations because they had an estimate of around 10%. What they're saying is that limited margin expansion and unchanged guidance on margins by the management signifies intense competition in the overall industry. Now, Nomura, on the other hand, has maintained buy with a target price of 1857, which suggests an upside of 20% from Friday's closing. What they're saying is that Q1 FY25 beats were led by profits and margin tailwinds are in place. They're raising UCP revenue growth for Voltas to 30% in FY25 overall estimates. And what they're saying is that Voltas' strategy to prioritize market share gain over margins is in the right direction. And catalysts which should support margin recovery include price hikes, moderating commodity prices, logistics savings from the Chennai plant ramp up, and PLI initiatives. And they've said that they maintain EBIT margins at 9% to 10.5% for UCP, and they're raising PE multiple to 50 times from 45 times previously. So these are the two very interesting notes on Voltas that have come today.
Indeed, one with a 20% upside and one with a 28% downside. But if anybody had to guess, there may be a positive session for Voltas this morning. But of course, a little circumspect with two big brokerages coming in with contradictory calls. Well, let's go across to our guest now. Avinash Gorashekhar joins with the fundamental view. Soni Patnaik with a technical view, and Kush Bora as well for a technical perspective on the markets. Good morning. We'll start with you, Soni. How do you feel about the Nifty? Friday was a strong day of trade, but the most views or short-term trades I've seen is a sell the rally. So 24,700 seems like a level where the Nifty will be facing some resistance. How would you trade the Nifty and Bank Nifty, Soni?
Hi, good morning, Samina, and to the panelists and to all our viewers. I think it's quite right the way you've spotted it out 24, 700, 800. I think that range is where you can see or expect some of the resistance coming in for Nifty. We've seen short covering last, Friday closing, and it was quite a strong short covering. We've seen aggressive put writing taking place in 24,300. 24,400, 24,500. These three major put strikes were witnessed a lot of put writing, indicating that support, that strength that market is seeing right now with the bounce back we saw. And, on expected line, the market just crossed above 24,500. It gave a close also above that. So from current levels, we feel that 24,700, 750 is a range where it can test maybe some resistance around those levels. But overall, the range of 24,450 to 24,750, 800. So that 350 points to 400 points range is where we see Nifty for the next 2 to 3 days. It'll be quite watch if it can take out the resistance of the 24,800. Any move above that, then again, maybe there's a chance it can retest the 25,000 highs again. So I think that will be only after we see how it fares out after testing the highs of 24,700 resistance today.
Indeed, that's going to be an important level for participants to track. Only if 24,700 gets taken out would 25,000 be in sight. But the good news is the VIX has declined quite sharply on Friday. Levels of 15 usually bring and add some comfort to the bulls. Kush, you want to give us your view on the index? It was a good, healthy close on Friday. But as we go into this week, no major cues or events to drive the index. What is the range for the week and what is the strategy at all on the index if you have one?
Hi, morning, Samina. First, a very good morning to you and to all the panelists and all the viewers. Well, pretty much in line with what you and Sony just discussed. There's a gap, closing in at the 24,700 mark. So that's the first one that you have to watch for. Once that is taken out, you're looking at a 24,950 to round it up, maybe a 25,000 also. These are the key levels to watch for. Now, what does the setup look like? We've had a closing above the 20-day moving average. The Nifty also crossed 24,500 mark. So technically speaking, Nifty has reversed the near-term, consolidation or the mild negative trend that we were witnessing. So, as I said, technically speaking, you could go long at these levels. However, we've seen a fair share of volatility. The geopolitical scenario isn't really all that encouraging. So, I think this is a time where, if you have long positions, any kind of 100, 150 points up move, you should take money off the table partially, at least, if not completely. That's the kind of setup Nifty is in. As far as Bank Nifty goes, I think the theme there is play the range, where on the upside you've got 51,000 as the resistance level, and on the downside you've got 49,700, 750 kind of levels to watch for. Now, closer to the upper end of the range, you wouldn't want to buy unless 51,000, 51,100 is taken out. So play the range is the theme on Bank Nifty. And Nifty, you could go long, but take money off the table, about every 100, 150 points of upside that you get.
Well, that's the view coming in. Technically, it is a range-bound trade that we're anticipating. 24,700 becomes important for traders to eye. Well, Avinash, good morning. Earnings season is behind us now. What did you make of the earnings season? And also, what is it that you're now watching out for in terms of fundamental news triggers?
Yeah, I think good morning, Samina, and good morning to both the panelists. My sense is I think earnings season has been quite satisfactory. Of course, the earnings growth this time has been largely, muted, but I think margins improvement was seen across many sectors like auto components, capital goods, real estate, infrastructure companies. So I think clearly, some amount of top line growth, expectations were slightly below expectations. But I think broadly numbers have been in line. There have not been many major negative surprises. And I think now the markets could possibly be looking at, macro triggers like what's the kind of commentary which is going to come on August 23rd by Jeff Powell, because that's going to give us a clear indication of how interest rates are going to be headed. Once the interest cut cycle starts, I think you could see that happening in India also. And I think that could be a big trigger point for most of the interest sensitive sectors. So my sense is now more than the stock specific kind of fundamentals, I think the macros would come in play. As far as liquidity is concerned, I think the markets has got a lot of liquidity. In fact, just read some reports that a lot of mutual funds are now sitting on decent cash levels. So that explains the fact that stock specific opportunities are also now getting increasingly difficult. So I think it's going to be a stock pickers market. I think it's going to be a little longer term oriented in nature. So I think for the time being, the markets could just drag. But yes, stock specific activity would continue. So our sense is that, it's always better to focus on stocks and typically key growing sectors where the earnings growth momentum in the quarter one has been quite impressive. So I think we are not advocating a very strong buy, but any dip in the market could obviously be used as an opportunity to add positions in portfolio.
Okay, watch out for so that's the broad landscape. Now let's focus on specific stocks. And before we get in the stock recommendations from both our experts, Sony and Kush, I think a large cap stock that would be in focus is Maruti Suzuki. It's a one-time hit, viewers, remember, but it's a large hit to the bottom line in quarter two due to the change in how tax is calculated on debt mutual funds post-budget. Puneet Johnson in details with the amounts, the potential impact, and more. Puneet, good morning.
Well, good morning, Niraj. Thanks for that. So definitely a big impact on Maruti Suzuki expected in quarter two specifically for this particular impact. Now, it is rightly said, it's an 850 crore impact that is estimated, and the company has informed the exchanges about the same. Now, this is due to removal of any kind of indexation benefits on debt mutual funds, specifically, which has been introduced in the budget of 2024. Now, the company has so far been, saying that it's stating that gains of these, investments from debt mutual funds as a deferred tax liability, and because of this removal of indexation benefit, the DTL has been increased by roughly about 850 odd crores in Q1 of FY25. This additional amount will be reflected as a one-time impact. That's what the company has said, and this is an accounting entry, so the actual taxation or payment of taxes impact will come once these units are redeemed, and the amount will be calculated based on the actual taxes or the gain that they have on these particular investments. Do note that FM Nirmala Sitharaman had introduced this as part of the 2024 budget, where long-term capital gains on debt mutual funds will now be taxed at 12.5% without any kind of indexation benefits, while the short-term gains on debt mutual funds will be taxed at the income tax rate. So it's interesting to see what is the market reaction to it, because this is just an accounting entry and not an operational profit which has been impacted due to businesses. And another key important thing will be to watch out for the other Nifty companies which are very cash rich also come out with such a notification going forward as well. So that's on Maruti Suzuki. Let's see what the market's reaction to it is. Back to you.
Yes, it's going to be a good one to track this morning. Avinash, you want to comment on Maruti? Fundamentally, how significant is this news flow where they will be taking a one-time hit, but not this quarter? It's going to be in the next quarter. So they're preparing the markets in that sense for that one-time hit. Do you feel like the markets may react to this news? And if yes, does that become an opportunity to buy Maruti if the weakness or the sell-off is extensive?
No, I think my sense is, I think this news development has come at a time when we have been hearing that most of the auto dealers are stuck up with large inventories. And I think, some reports suggest in the market that possibly the passenger car market is now going to face some sort of margin pressure because commodity prices have started rising. So I think, obviously the news is a one-time hit, so it's not going to be a recurring item. But I would believe that, maybe some more weakness on Maruti could be a good opportunity to accumulate. So, I don't think the markets have fully discounted this fact. And I think unless we get quarter two numbers, because volume growth numbers, if they start slowing down or if there is a slowdown in the volume growth data point, that is something which is more negative for Maruti. So I would prefer a hold. I think any fresh buying, maybe after the Q2 numbers would be advisable.
Okay. Point well noted. I think a technical reaction might be good to get post markets open and the stock reacts if it does. But speaking of technical and derivative reactions, what are the ideas for this morning? With an assumption that we start off higher, Sony, ladies first, I'll come to you first. Your top calls for the day today.
Good morning, Niraj. So the first pick is from the IT space, Coforge. Would be my pick from that space. So we've seen good momentum in IT, and Coforge looks like it is coming out for a fresh trend line breakout. It has given on Friday with good long built-up position on Friday closing. So one can buy at current levels, keeping a stop loss of 5980 in cash level and a target of 6200, 6250 can be seen for Coforge. The second pick is from the pharma space. It will be Syngene. So Syngene has also seen a good breakout above its 10-20 EMA on technical charts and looks quite strong to test higher levels of 850, 860. One can buy at current levels, keeping a stop loss of 815 and a target of 860.
Okay. And Kush, what about your ideas for this morning?
Sure, Niraj. Couple of them. Pitti Engineering, this is one stock that has rebounded quite smartly after a round of profit booking. Continues to see, uptick in volumes as well. So I think from a near-term perspective, 1380, 1410 are the targets to look at. 1330 is a good support zone. So that's where you can place your stop loss. KIMS, Krishna Institute of Medical Science, I'm sorry. This is the one that has now completed a rounding bottom formation. So here too, you're seeing good volume pick up. The momentum indicators are also suggesting an uptick here. 2355, 2380 are the near-term targets. 2275 is the level where you want to place your stop loss. Also, a quick mention of one stock that we had discussed last week, which is Genus Power. Although in the volatility, the stop loss of 385 was hit, I think the stock has enough and more momentum and leg to move upside from here on. 400, 408 target still intact. You could move the stop loss a little lower to 380, and I think I heard you also mention this stock, perhaps getting an order win, so must be on the traders and the investors' radar at least for today.
Most certainly, Kush. It's a large order win for Genus Power, and maybe very likely that the stock should have a positive reaction. So, Kush, it'll be interesting to get your view on this one post the pre-open as well, because the stock will likely start off higher. So a lot of people may not be able to get in at yesterday's close or Friday's closing price. So we'll try and do that. Actually, Avinash, before we take that break, very quickly, any thoughts on this Genus Power or some of these prepaid meter companies, smart meter companies? Do you like any of these? Because all of them have run up.
No, I think, Niraj, this is an interesting kind of space. I think apart from Genus, HPL Electric is also another company which should benefit. And I think the government is now looking at installing smart meters quite aggressively across the country. And that is definitely going to give a big booster shot to all these companies. I think it's definitely overdue. And I think looking at the kind of power spillages and the kind of power thefts, smart metering is now the new kind of method by which properly the customers as well as the government knows exactly what is the metering on these meters. So I would believe that Genus definitely would benefit significantly. They have a very large book, and obviously looking at the current order, I think that gives them a very strong amount of revenue visibility for the next 12 to 18 months. So I think this space would be interesting, but I think as you rightly mentioned, buying these stocks at the right price is very important. I think probably Genus could see a gap up today morning, and I think I would suggest investors should use any dip only to look at chipping into these companies.
But it's futile trying to time those dips sometimes. We'll take a break. We'll come back. We're gearing up for pre-open trade. It's expected to be a good start in early minutes of trade. Now, whether that rally sustains is what would be important to track. We'll take a break. We'll come back with a lot more on the other side. So stay tuned.
All right, back with India Market Open right here on NDTV Profit. The implied open suggests that we will have a good start. The question only is, can we build on from there, or will we succumb to some bit of selling pressure? Remains to be seen, because we've had a good move in Friday's session. Very likely that there is some continuation out there. Our experts have given the strategies on individual stocks, but Sony can't not talk about HDFC Bank. Kush spoke about it. Not as much from a trading perspective necessarily. So, Sonia, I want you to come in and talk about it from a trading perspective. It's after a while that I saw HDFC Bank leading from the front. Can it do more? Would you trade HDFC Bank?
So, Niraj, HDFC Bank continues to hold above 1600, which has been quite a crucial support level for August series. We've seen good put writing continuing to form its base around 600 put option. So for the whole of series, until and unless that support is not breached, it may remain consolidated or sideways. Not looking below 1600 for now. There's another plus side is that on Friday closing, it closed above its 20 EMA hurdle. So I think from current levels also, it looks like it can test the higher end of the range, which is around 1650, 1660 range. So this is the range for HDFC Bank, somewhere between 1620 to 1660. Any move above 1660 only can see it having, or testing its higher targets of 1700 levels, which perhaps may not be right now in August series, but certainly a positional play. One can continue to accumulate the stock with 1600 as a stop loss and hold the stock. It can test 1700. It just becomes a positional play. Maybe around after 10 to 15 days of a positional play, one has to hold for the stock.
Well, that's the word coming on HDFC Bank. Kush, did you track what happened with CDSL on Friday? It was not just Friday. The stock is up 3 out of 4 trading days last week. Do you expect the momentum to continue? Opportunity for a trader for this week on CDSL?
No, for sure. In fact, I think I'm also supposed to believe that if there is any kind of dip or any kind of volatility that comes about, in stocks like CDSL, even BSE for that matter, should actually be taken as, a buying opportunity from a medium to a long-term perspective. Now, as far as the weekly setup goes, yes, there has been, a remarkable, spike in the volume on not only on Friday, but in fact a couple of days, couple of other days also last week. I think this momentum could, very well continue. You're looking at a 2900 plus, 3150 kind of a move on CDSL, in the coming days. 2700, 2690, these are the levels where you want to place your stop loss. I think on the whole, the near-term play is also on, but I think these are, stories that you want to play from a medium to a long-term perspective as well.
Just a quick one, Sony on PVR, you track this one, was up 5% on back of that release. I know it's not significant news, but it's just fun for a Monday morning.
Certainly, I think Samina on Friday closing, it was indicating good data. It has given a very good closing above its 20 EMA hurdle, which is good for short term. So from current levels, it can test 1530, which is going to be the next level of resistance. It's very crucial for PVR to continue to cross the hurdle of 1530, 1540 range. Very important, because above that, you can see the stock heading towards 1600, which becomes a positional play. But I think one can continue to hold the stock, keeping a very strict stop loss of 1475.
Okay, the pre-open session, and it'll be all over the place, mind you. So that's why it's better to revisit these pre-open rates at 908 when the rates have settled down. But be that as it may, watch out that some of the stocks would be moving around. This is a more believable depiction of what could happen. Maybe slightly lower than this, but this is how we're likely to start off. Now, just before I go to Avinash though, there were some price volume movers that we highlighted in the trade setup today. Just want to test what does Kush Bora or Sony think about some of these. So let's get them up, because there was Triveni Turbine, there was Kitex Garments, and there were 2 more, 3 or 4 names, which EPL and some others, which have had some very strong moves in the whole of last week. So both price and volume action. Kush Bora, I want to come to you a bit of a rapid fire here. 2 or 3 names. Do you like any of them on the charts? So Kitex Garments apparently has had a decadal breakout, price visited after 10 years. Triveni Turbine, 7-8 days of consistent gains. I think there is EPL, which has had some volume action. Any of those look interesting to you?
Two of them, Niraj. First is Triveni Turbines, and I think we've had a discussion around this stock, a couple of times. Pretty good run up. The volumes have actually, they've shot up on a weekly basis for sure. But for the last session or so, they've actually declined just compared to what they were on Tuesday and Wednesday. But on the whole, the setup looks very encouraging. I think Triveni Turbines, from my perspective, is a very clear hold. 840 to about 870 are the levels to look for. And the other stock that I like in this space is EPL. Here too, you're seeing a completion of a rounding bottom formation, very clear breakout above that 335, 340 resistance zone. So if anyone's got a position, you should continue to hold for targets of 265 and 280. If you don't, then still you can, get into for these levels. Your stop loss will now be 240. The other two, they've shot up quite a bit, quite rapidly, and they're approaching overheated territory. So I'd perhaps just wait and watch, ride the momentum, no fresh entry.
So those are, just be careful with some of these stocks because, they've had a mixed history, particularly Kitex Garments has had a mixed history from being very high to being mired under some controversies, if you will, and then is making a comeback. So just know the company well. If you're trading, it's fine. But if you're investing money fundamentally, then just kind of research these stocks a bit more before you go out and try and trade them. So Sony, we've gotten Kush's view on some of these stock movers. I heard you say that one of your ideas was an IT name. Nifty IT was the best performing index in Friday's session. In fact, the whole of last week, if you will, not necessarily in Friday's session. In Friday too, but the whole of last week. Now, my question to you is there a mid-sized IT name that looks interesting for a trade?
So I think, definitely we saw a lot of these momentum getting backed by the heavyweight IT names only. Mid-cap, I think only it was Persistent, Coforge and Birlasoft to some extent that showed the momentum. If you talk about specifically any mid-size, then, there could be two stocks that comes, one from a large cap space, one from a mid-cap space. The large cap is definitely caught my attention would be Wipro. I think if you can look at Wipro, it has given a good close above 510 and this closing has come after a very long time. So I think that has built a good support around 500. The stock looks quite positive to test higher levels of 540, 550 range. So this is the first stock one can accumulate. The second stock would be in Birlasoft. I think Birlasoft also has a similar formation where it has given a good closing above it, 590 odd levels. It is heading for an option chain breakout. Now that breakout has not come. I'm just preempting that the breakout would come considering the kind of positions it built on Friday backed by volumes. I think the next level to look out for intraday basis would be 620 for Birlasoft. If it can close above 620, the stock has a good potential to head towards 660, 680. So the risk reward ratio is quite favorable and very attractive for Birlasoft at current levels. A good support at 580, one can accumulate at this level, keep a strict stop loss of 580 and hold for a positional target of 660. Any move above 660, you can see it heading towards 680 as well. So this becomes a bit of a positional play, but certainly with a good risk reward ratio, it's worth the risk.
Right, that's the word coming in some of those mid-cap IT names that have been the big gainers this week. Avinash, anything that you like in these markets that you're eyeing, that you may be looking at acquiring in your portfolio tactically? Of course, I know you can't take a daily call on strategic allocations, but tactically, any stocks that one could add to their portfolio in your opinion?
Well, I think, within the hospitality space, we continue to like, companies like BLS International. We believe that it's got a service-oriented kind of business, and most importantly, very strong numbers in quarter one, profit of almost 120 odd crores compared to 70 crores. And once the integration of iData, which is the company that took over in Turkey, I think that gets integrated with the company. I think you could see a further earnings growth kind of momentum coming in FY25. So I think here, the company continues to be cash rich, free cash flow positive, and most importantly, it's got a very dominant space in the visa processing market. So our sense is that even as of now, somebody wants to take a 12 to 18 month call, this could be a good reasonably bet to play on the hospitality space because clearly I think they have a monopolistic position. and the financials are also pretty strong. So I think any dip or even at the current odd levels, one should look at buying this stock.
As the pre-open rates settle down, by the way, watch out for Zomato, Chalet Hotels, and some of those stocks. They are doing very well. I wonder if Shriram Finance is doing well. But the reason I bring that stock up, Shriram Finance, is because my colleague Harsh has picked up the HSBC note on that business. Harsh, good morning. What is HSBC saying? Are they constructive? Are they not?
Good morning, Niraj. Extremely constructive on Shriram Finance. It's a stock which has gone up 60% over the last 12 months. So it's certainly given very good returns to investors. But HSBC sees a further 21% upside from here. Now, just in terms of setting the context, last 10 years, the financier has struggled, especially in the 2012 to 2022 period. And HSBC believes that the financier has firmly put some of those woes of the last decade, which is still up to 2022, behind it. What they're seemingly suggesting is, one, growth is extremely strong. Second, with the merger of the Shriram Finance Group, they've consolidated and strengthened the business. They've put some of those mergers and acquisitions behind them. Lastly, what they are seemingly suggesting is that in the unsecured segment, Shriram Finance has limited exposure, which is a positive as well. So overall asset quality as well as growth, both of those being very, very well balanced in a company like Shriram Finance, and operationally the company is set to turn a corner, is what the note seems to suggest. Last off on expectations, they're expecting an ROA of 3.5% for Shriram Finance, which is again very strong. 17% ROE is what they're expecting the company to clock going forward. So good metrics on that front. And they're valuing the company at 2.1 times price to book, 21% upside from here. So significant scope from here on Shriram Finance.
Ooh, indeed, significant scope on Shriram Finance. The stock was up 2.5% on Friday, and pre-open trade expected to see a gap of 1.5% higher. Well, OMCs are looking good this morning on back of the price movement on crude. It's a travel boom for those numbers that we saw in terms of passenger details has led to a positive impact, not just on GMR, but also on hospitality names in early trade. So it's an interesting morning that's playing out. I'd also like to see what happens on Voltas. There's a buy call and a sell call from two big brokerages. The stock will be pulled into opposite directions. But for now, trading with a very clear positive bias. A couple of other names that are on my radar. Sony Zomato, do you track this one? I mean, it's difficult not to. It's indicating to a 5% gap up in early trade at 278. What's the call on Zomato?
Certainly, Samina, we can see Zomato is looking quite strong. It's, the pre-open rates have settled in, and it's giving you a very fresh breakout in the stock. I think the stock will continue to see higher levels of 285, 290 for the day. That's the target coming in. Good support first, of course, 275, which is indicating the pre-open rates of a low. So I think that is going to hold a crucial support. Either way, I think the breakout that has come is above 268. So hold the stock with 268 as a stop loss, and just hold the stock for targets of 290.
290, that's the call coming in on Zomato. Well, a couple of other names that are looking good this morning is GMR, Chalet Hotels, Lemon Tree. Those, of course, are gaining on back of what we've seen in passenger numbers for the month of July. But OMCs, Kush, you want to comment on BPCL, HPCL, IOC? They're usually good trading opportunities depending on how crude really does. So this morning, a gap up is expected. Would you do an intraday on either of these names I mentioned?
Well, perhaps on a BPCL, but other than that, I don't think there is too much to be had or too much to be played in some of these names. Again, they fizzle out equally fast. But then again, if you really want to, then perhaps, as I said, a BPCL is one that you want to keep on your radar. Keep Friday's closing as a stop loss close to those 332 levels. On the upside, 342 and then perhaps a 350 are the targets that you look at. But again, keep taking money off the table. These stocks fizzle out equally fast.
Okay. Avinash, just wondering, if you had bought into Zomato a year back, fundamentally, would you stay invested or would you take some money off the table? The rally's been very swift. Sony sees upsides. Fundamentally, would you take money off?
So I think looking at the kind of monopolistic nature of the business and the kind of performance Blinkit has also been performing, I would believe that the cash flows are yet to come in. The narrative is pretty strong. So maybe, I mean, if you have a 1 or 2 year view, I think we could possibly see higher levels. I think this is a unique story where there are not many players in the food app business, and that gives Zomato a very strong kind of bargaining reach with its customers. So we would prefer to hold on. I think any dip, of course, should be used as an opportunity to accumulate. But yes, I think the bigger story is yet to emerge. Probably FY 26, 27 would be a lot better in terms of financial data points.
Okay. Well, keep an eye out for Zomato fundamentally. Avinash, just a quick word on Shriram Finance. Let's talk. HSBC is constructive, starting off well again today. Quick view here.
No, I think I believe Niraj, it's a very mature kind of business, and I think they understand the business very well. Very strong collection efficiency, and I think looking at the kind of tailwinds in the sector, I think they are fairly well positioned. Even in terms of the valuation comfort, I think the stock looks pretty attractive. So I think looking at a medium to longer term horizon, even at the current odd levels, despite the fact that the stock has seen a good increase, one could definitely expect a decent risk reward if one has a 12 to 18 month time.
Interesting. A quick check on how Maruti is doing in early trade. Let's take a quick check, and I think Niraj will, of course, highlight that for you. It's a flat, so no major reaction coming in post that 850 crore loss that they would be seeing in the next quarter. Well, among stocks, your biggest gainer is Zomato this morning, followed by BEML, CDSL, which still looks good, ACT. Some of your pharma names are doing good. PVR, Inox is having a positive morning. On the sell side, it is defense companies, shipbuilders. Niraj highlighted this in morning trade. Mazagon Docks is down again in early trade. Sony, any shorting opportunities amongst the shipbuilders?
So I think, Samina, it's wise just to take just like wait for the first 15-20 minutes and see, although the pre-open rates are suggesting a bit of a downside in Garden Reach, Mazagon Dock, the overall structure still remains a bit positive. So I think it's just going to be a wait and watch and no immediate short calls in this space just as of.
Okay, viewers, also remember that some of these stocks have corrected a little bit already. So bear that in mind. Maybe that's where Sony's concern about further shorting might come in, but hey, it's such an interesting pocket to point out. I'm glad we spoke about it just before markets open, but here's how the markets are starting off today. On expected lines, about 80 odd points, so no surprises there. Bank Nifty, well, almost in line again. I wonder if Nifty IT, the best performing index, is doing okay. But more importantly, the mid caps and the small caps. So IT is flat, mid caps and small caps on your screen very quickly. 0.5% for the mid cap index, small cap index about 0.8%, so not bad going really for the markets at large. Now let's get the individual movers up on the screen, the Nifty 50 gainers and losers, and very few losers, by the way, yet again, just one row of losers or slightly more than that. But look at the top losing stock, HDFC Life, just about 0.33% lower. But the gainers, ONGC, and by the way, All India, ONGC, all of them up in trade today. So the upstream oil companies seem to be doing well. That's interesting. BPCL is up about 1.6%. Shriram Finance, yet again, the HSBC note out there that Harsh highlighted, 1.5% higher for that one. Some strength in Hindalco and Tata Steel. So a bit of a bounce back for the metal names. Ultratech, Reliance, Adani Port, and L&T make up the others. So, Samina, hand it over to you. Not too many stocks losing out, but upstream oil in particular seems to be marching ahead. I do not see an HDFC Bank in the top 20 winners as yet, Samina.
Indeed, and it's a lukewarmish start, right? 0.3% high, but of course we shouldn't be complaining. This comes in after the Nifty was up 1.6% on Friday. We didn't have much of a handover in terms of what's happening in Asia, so we are dancing to our own tunes, and it's not a bad market. The breadth as well, largely positive, as you can see. Oil and gas seems to be in a good space. They weren't doing well on Friday, so it could be a little bit of participation coming in from stocks that did not see any gains on Friday's trade. Well, let's quickly take a look at how the broader market setup is this morning. The Nifty itself is up 0.3%. The mid cap and small cap is outperforming the benchmark. This was exactly the same trend that we had seen on Friday as well. A couple of stocks that we're tracking this morning, a few that we highlighted on trade setup, a few that are just moving largely on back of sentiment. Genesis Power is the top one. That was a passive order win for this one. The stock should see some movement in early minutes of trade. If I can pull that one up, it should be useful. It's on upper circuit on back of an order win. 5% higher is what we have on the stock, locked in at the get-go in early trade. Shriram Finance, you had a brokerage upgrade coming in on Shriram Finance. The stock market likes it. The stock was up 2.5% on Friday, building onto those gains in early trade this morning, up about 1.8%. Hind Zinc has had it so rough. The stock has done nearly 15% last week. And if you were expecting it to cool off this morning, there's bad news for you. Vedanta continues with its OFS, adding some more now. So the stock seeing another 5.5% cut. So 20% lower on Hindustan Zinc in the last 5 trading days. So between last Monday and this Monday, the stock is up 20%. Well, one of the top gainers this morning is Maruti, is Zomato. It's one of your top stocks. Maruti is flat, not reacting to that 850 crore hit, that one-time hit on back of removal of indexation of debt funds that came in the budget last year. Zomato is doing well. Pre-open was indicating to a 5% gap up. The stock is not bad at all. 4% gains on Zomato is what we have. Shipbuilders are having it quite rough. So you've got Mazga Docks and Garden Reach both seeing some selling pressure. Garden Reach has turned into positive territory, but there was a very disappointing brokerage note that came in ahead of the weekend with huge concerns and downside on Mazga Docks, the stock on back of which is trading lower. Travel boom is what we're calling it. GMR Airport was one stock that we thought would react to the increase in travel form in terms of domestic and international travel, and it's the passenger data that came in. On back of it, GMR Airports is up about 1.5%. Hotels were seeing some buying, at least in pre-open trade, but the rates have settled now, and those stocks not participating on that. But all in all, it's a decent morning, Niraj. I think it's going to be a little circumspect, a little cautious, but that's also because we don't have too many cues that could drive the markets in either directions.
Yeah, probably the nature of the game in the near term, at least until we see some Fed action, because the earnings season is behind us now. So bear that in mind. I think Samina's highlighted most of these names. Hind Zinc is the top loser, yes. And the shipping names that she mentioned, shipbuilding shipping names. So between a Mazgon Dock and some others, they are showing downsides for sure. Interestingly, Bombay Burma is up 6.5%. And Samina was speaking about the travel theme. BLS International seems to be perking up as well. So bear that in mind too. But opening thoughts, quick opening thoughts. Kush, to you first. Any thoughts on how we've started off? Is there a trade on the index or specific names?
Not a bad start at all. I mean, we've seen a mild round of profit booking, if I can even call it that. But I think, this is, you'd want to continue to hold on to your long positions. It doesn't seem like such a bad opening just yet. As far as stocks go, I think, Pitti Engineering and Kim's, these were the two stocks we discussed in the morning for today. Both of them hit the first target. Pitti has now come down a little, so you might want to consider a re-entry into this. Kim's, now you can play for the second target, keep a buying price as your trailing stop loss if you got an entry into this. I think KEI Engineering is starting to look attractive. It's made a comeback. It's gone above the 20-day moving average now, testing the 50-day moving average. Once it crosses this 43.80 kind of zone, I think you could see a further upside. So you want to keep that one on your radar. But I think Pitti Engineering, Kim's, these are a couple of stocks on the name. And as we discussed, maybe visit Genus Power once the market opens. The stock is locked in upper circuit, and the volumes are pretty staggering. So my suggestion would be to continue to hold on to this maybe for a day or two. See if it's got another 5 to 10% kind of an upside left in it in the days to come.
Right. Well, that's the quick update coming in. Sony, what about you? Have you spotted anything in the last few minutes? Oil and gas is your biggest gainer. So from ONGC to BPCL, HPCL, IOC, they're all trading pretty well this morning. Anything you've spotted for an intraday or a week trade?
Certainly. So, Samina, we just spoke about Birla Soft a while back, and the stock is above 625, 630 odd levels. I think that stock can continue to hold, as we just mentioned, for the levels of 640, 650 can be tested. But for intraday, I'm clearly looking at PFC. Now, the stock has been hovering around the resistance of 510, unable to cross that for a very long time, and the stock has just reversed and come back again towards those levels of 509, 5010. So I think that's your stock to look for on intraday basis. If it's able to cross that 510 resistance, it can head towards 520, 522 for intraday, and keeping a stop loss of 500.
Right. Well, that's the call coming in on Birla Soft. A quick update. Hindustan Zinc. Avinash, do you track this one with Vedanta's OFS? The stock has taken a fairly a big beating in the last 1 week, 20% off in the last 5 trading days. For a fundamental investor, is this an opportunity to buy the stock?
Yeah, I think, Samina, if your time frame is slightly longer term, I think Hindustan Zinc continues to be a cash-rich and a free cash flow generating company. And I think this event, which is the OFS, is the key reason why the stock has been under some pressure. I think once this event gets complete, I think normalcy could start, and I think we could see some value buying emerging at lower levels. Our sense is that the money which is being raised probably by Vedanta, by the OFS of Hindustan Zinc, is largely to repay debt. Most importantly, the dividend paying propensity of Hindustan Zinc does not get reduced. They generate a decent amount of profit, and I think for shareholders having a slightly longer term kind of approach, this definitely could be a good opportunity and a good entry point, provided that time frame is slightly longer term.
Okay, slightly longer term time frame. Interesting. In zinc out there could be very interesting. One question before we thank our guests one by one. But Sony, I'll come to you. And the word on the street seems to be that there is steel price cuts on the anvil, and therefore fundamentally any rally should be sold into. Do the charts look weak for a JSW, Tata Steel or some such?
Definitely, Niraj. I mean, we've seen the correction in the past few days for the entire sector. And, even though it's bouncing back, maybe like a percentage or two, it does not give you the confirmation that it's a good rise or it's just reversing from here. The structure on charts and derivative parameters do continue to be a sell on rise. If we talk about Tata Steel, JSW Steel, Jindal Steel, these stocks, they are in a sideways range for now. But particularly for JSW Steel, it does give you a sell, but the sell will come below the 900 level. For intraday, 950, 917 is a resistance, but positional play, a sell only will become confirmed only if it's crossing below 900 level. So below that, it gives you an option chain breakdown. It can retest the lower levels of 870, 860 again. So I think that's the range to watch out for. 917 for intraday resistance, but keep it for a positional sell. Below 900, you can see lowest support levels of 960.
A handful of gainers this morning. It's not a very exciting Monday morning. Let's be realistic about this. But you've got Bombay Burma that's up 8.5%. Now that's a big move. Kaplan Point Laboratories is up 6%. BML is up 5%. Birla Soft, which was Sony's pick this morning, has actually turned out to be the top gainer in trade, up 5%. So good on you, Sony. That was a good call. CDSL is up another 5%. BLS International is up 4%. Zomato is looking good. Tamil Nadu Mercantile Bank is also seeing a 3% up move. And some of your equity market plays like Nuvama, 360 are all looking fairly good. Avinash, you've got the bonus issue of 1:1 on CDSL with a cutoff date of 24th August. Stock is already up 15%. Opportunistically, could one look at buying CDSL between now and then?
Yeah, I think, Samina, this is a annuity-based kind of business. And I think if you look at the kind of growth in the capital markets, only two companies, CDSL, which is listed, and NSDL, these are the only depositories which operate in India. Clearly, I think going forward, the government is looking at paperless kind of, certificate issuing, even on the insurance business side. So I would believe that, this is a stock where one needs to take at least a couple of years in mind if one were to invest at these levels. Of course, now you could get the benefit of the bonus, but typically earnings growth and the value creation would possibly come only if the investor holds in such kind of stocks for a slightly longer term period. But yes, I think the tailwinds continue to be pretty solid. As long as the capital market grows, number of demat accounts grow, I think business is going to be flourishing for CDSL.
Right. Well, thank you, Avinash, Sony and Kush for joining us this Monday morning. Have a good week and we'll see you guys soon. In the meantime, the Nifty is having a positive morning, but it's all about stocks. No major winners or losers. Oil and gas stocks are looking good this morning. You've got a little bit of buying interest that some of these travel companies might be seeing. You've got random and sporadic movements in stocks like a Kaplan and a Bombay Burma too. The Nifty itself is off the day's high point, but still trading with a positive bias. What we're expecting is it's going to be a week where the markets will consolidate but remain with a positive trade. We'll take a break. We'll come back. Don't go anywhere. On the other side, we'll be talking to Sanjay Kumar Jain, Chairman and Managing Director of IRCTC, to talk to us about the quarter that's gone by and what lies ahead in FY25.
Good morning and welcome to Earnings Edge right here at NDTV Profit. We're now taking stock of IRCTC on the back of the Q1 numbers. Revenue grew by roughly around 11% while margins, while degrew compared to the same time last year. Profitability was very strong, up roughly 33%. To talk about the numbers and a little bit more on the segmental performance of the company, we're now joined by Mr. Sanjay Kumar Jain, the CMD of IRCTC. Good morning, Mr. Jain, and thank you so much for joining us today. I wanted to just start with, the Q1 numbers. It's been a decent set of quarters, which is impacted by, elections as well as other heat wave and other issues as well. Talk us through, how has this quarter been? Because we've seen some growth in segments such as, catering as well as rail need, but seen some degrowth in tourism and internet ticketing. What led to this particular quarter-on-quarter impact? And if you could talk us through the demand environment as well.
Puneet, first of all, I wish good morning to everyone, and let me clear you that this is not the excellent result only. It is the highest ever Q1 result, both in revenue and margin. And another thing, all our segments except tourism has done equally well. They all grew in 2 digits, and in tourism, yes, certainly because of code of conduct, model code of conduct due to election declaration, we could not do good, but we will be coming back very quickly in this quarter.
Now, I just want to talk about the business per se. So, As we get into quarter 2, how are you seeing the demand environment currently? Are you seeing, like starting July, have you seen an increased, from passengers to go out and travel a bit more? What is it that you're seeing on the ground currently?
You see, going forward, the environment in India today is that the investment in rail infrastructure is growing, economy is booming, and we are in an environment where we are expected to get more number of trains in the days to come. So our all segments, be it catering, be it rail near, be it IT and tourism also, because we mostly do rail-based tourism, these all are likely to grow exponentially.
Now, I just want to talk about, the tourism business specifically. You've seen, in this quarter there was an impact on the macro factors, but this business has seen quite a revival from the last year. We've seen positive margins also coming in compared to last year when it was negative about 20%. What is it that's changed in this particular year? What has the company done to improve these margins? And how does this year look for the company for the tourism space?
You see, largely our tourism business, we are doing two kinds of tourism business. One is mass tourism through our Bharat Gaurav trains. And in that, certainly, yes, we could not do much because of model code of conduct. But other business like RTP rail-based tourism packages, that has seen a growth of 26%, and in our outbound tourism, it has increased by 229% in this quarter, and we are seeing the same kind of things happening. And when as now model code of conduct is gone, 8 states we have already done MOUs with them. So our margin certainly will grow because of all these segments which are highly profitable. We have included in our business.
Anything in particular that that has come about in the last 2 quarters? Any kind of new MOUs that you signed with certain specific states that you want to call out?
Yeah, we have signed our MOU with DMRC, CBI, and a couple of other MOUs are in the way. And we have signed MOU with state government, 8 state government we have already signed, 2 other state government already the process is on. Most likely will be signing in this quarter only.
Now just let me take a step back from the segmental performance and talk about the 2 main triggers for you, which is going to be Vande Bharat as well as a larger focus on high-speed rail trains. What is the long-term benefit that you're seeing from these particular segments? Which are the verticals? Because you're present across a few verticals which are linked to the tourism space as well as ticketing as well. What is the benefit that you see from these 2 spaces, the Vande Bharat as well as increased penetration of high-speed rail?
You see, Vande Bharat and high-speed trains are certainly going to add infrastructure for free and smooth movement of passengers across India, and that will give challenge to the even low-cost airlines. And the more number of trains are coming, the more business is there with for IRCTC. Our only challenge will be to grab as much as possible, as quickly as possible. Thanks.
Well, that's good to hear. So just one follow-up. What is the current contribution from Vande Bharat specifically for IRCTC? And are you the sole supplier for across verticals of rail near tourism as well as catering? Or is there some other suppliers also currently for the Vande Bharat?
No. You see, so far as catering is concerned and rail near is concerned, IRCTC has been given the mandate. And in rail near, as we are not able to supply the complete demand, though we have improved our rail near production, we have enhanced the capacity and further enhancing the capacity. But as we are not able to fulfill the demand, so other players are also coming. But once we put our things in place, we will be gaining too much.
Anything you can specify on what's the current contribution from the Vande Bharat trains to revenue?
is a sizable one. You see, we have total 51 pair of Vande Bharat, out of which catering we are doing on 48 Vande Bharat trains. So all the Vande Bharat trains are with us. Almost.
So somewhere in the mid-teens, is that a number that we could go with? If you can't specify the exact number, somewhere in the mid-teens?
Yeah, certainly yes. Because now you see the trains which the future trains are only Vande Bharat. So certainly when the number will add, so we'll improve our share.
Now, just one question on the license fee. Do you see it? Do you see IRCTC increasing the license fee anytime over the next 12 to 18 months? Because you're going to see a lot of demand. As you said, Q1 was affected due to model code of conduct, but we are expecting a larger push on consumers from Q3 itself. Do you see any kind of impact on increasing the license fee currently? Do you see that happening over the next 12 to 18 months?
Not now.
My final question, sir. Now, margins we've seen, for the internet ticketing segment be upwards of around 18%. You are guiding for, better margins in the tourism space as well, and increasing the capacity of Rail Neil going forward. Do you see that this year will be a better year for margins for IRCTC compared to the last year? And how are you seeing the revenue potential? Because there's a lot of impetus on growth in the second half itself. So if you could just guide us on these two things, margins across verticals as well as revenue growth higher this year, because there's a lot of pressure on H2 to deliver.
Oh, good question. You see, what we are trying to do as of now, we want to improve our product mix. We want to improve certain segments which were laggard earlier. And our main target is to provide affordable facilities to the customers, so that we be competitive in the market and we gain the major chunk of the market slowly. So our strategy would be, at the moment, that add more and more number of business there, more and more customers there, and for that, even if we have to trade off with the same number of margins, we would like to add volume and the numbers. So our strategy is to improve the revenue first and keeping and maintaining the same level of margins.
Understood, sir. Revenue growth this year while maintaining margins, it's a good outlook for IRCTC this year. Thank you, Mr. Jain, for joining us today and speaking to us on Q1, as well as what looks at a good set of numbers as well as a promising year for this particular financial year 2025. We wish you the best and look forward to our next conversation. But thank you so much for joining us today.
That's, of course, IRCTC. By the way, some flashes on your screen. The Adani portfolio Q1 FY25 performance. Statistics around what emerging businesses have done, what consolidated EBITDA performance has looked like, and the 70% growth in emerging businesses effectively driving some part of that. EBITDA overall up about 32% for Q1, and the adjusted profit after tax up about 50% as well. So a clutch of emerging businesses, of course, doing well, but those are the smaller part. Remember, the stable businesses also contributing, as a result of which seems to be a fairly strong performance, and the net debt to EBITDA numbers also at comfortable about 2.2 times. So bear that in mind. Standard disclaimers, of course. The Adani Group owns NDTV, and you're watching this on NDTV Profit. So that's the sum and substance of this. But 32% EBITDA growth, most importantly, everything else notwithstanding, Samina, 32% EBITDA growth in Q1, in a quarter which largely has been just about muted for India Inc., as the Q1 notes have suggested. And expected simply because it was the election quarter. 32% EBITDA growth seems to be very solid.
And profitability is up 50%. And more importantly, even operationally, net debt has improved quite well. So leverage is off at 2.2 times, which is at a multi-year low as of 31st March 2024. Remember, Adani Enterprises is also in the news today because of the plans to raise funds through NCDs of 400 crores with an oversubscription option of an additional 400 crores. So all in all, it's been a solid quarter for the group company. The stocks reacting positively to that. We'll take a break, but we'll put the focus on Blue Star. It's been a golden summer, like they call it. We'll try and understand from the management of what lies ahead for FY25 and, of course, all the plans they have for the company and the outlook for the sector.
Well, the earnings season may have been a bit muted, but for and on expected lines, but select companies have actually delivered very, very strongly on a number of counts. So Blue Star would probably feature amongst those lists because with a 28% uptick in revenue, though you could argue that maybe that number may have been marginally below what the street was estimating, but on the EBITDA front and the margins front, outperform. But it's not just about the quarter that we want to talk to Mr. B. Thiagarajan about. We want to really talk about what is in store for the rest of the year and arguably for the rest of the decade as well. As Samina was saying, it kind of enters a golden summer for the year, and maybe we'll see many more golden summers out there. Mr. Thiagarajan, thank you so much for joining in our studios. Pleasure talking to you today.
It is wonderful to be here. Your studio is really impressive.
Thank you so much. As impressive as your numbers have been, sir.
One of the finest studios I have ever been. It's a pleasure to be here and interacting with you and Samina.
Thank you so much. So let's start this off by talking about how much of a pleasure was quarter one for you. The start of the year, people want it to be good. In a quarter marred by lack of activity due to elections, you've delivered reasonably well and very well on the margin front. How did you feel about it?
I think we delivered exceedingly well. As you may recall, before the season we interacted, I had predicted it maybe 25 to 30% growth. And we were surprised to see growth of over 40% in the last week of March, 70% in April, another 70% in May. It tapered off in June. Overall, it is more than 55% growth. The industry did extremely well, and I think it is driven by very harsh summer season. And it is a happening industry. From now on, I think the growth will be significant, and we anticipate that the market size from around 14 million, it may be this year 14 million, to around 30 million by 2030. Mm-hmm. And it is a significant growth that is happening across.
Wow. Sorry, did I hear you say that the industry size could more than double over the course of the decade?
Yeah. By 2030, I think definitely it will be 30 million.
Right. Okay. Sir, you've historically grown more than the industry. And we've seen that every time we've spoken to you, you've created that alpha over industry growth. From what I read and I understand from a little bit of stuff on your earnings, some of the players were unprepared for this massive surge in demand. Were you managed to fulfill the demand that came in this quarter? Because capacity utilization must have been at over 100%, I would have imagined. And hence there could be a little bit of FOMO feeling, given that this golden summer was behind us.
A very intelligent question. I don't think this quarter we would have grown faster than the market. This particular quarter. We were very clear that it will be a 25 to 30% growth. You could have managed another 5%.
At best.
At best. But, March itself, we had to exhaust what was planned for April. Then April, we thought the summer has advanced. See, over the years I'm watching, the peak of the season, what used to happen in the May last week, moved to May middle, moved to May first week, and April. I thought now the season has advanced. See, it was a golden summer for different reasons. There was IPL that was happening. There was election season, and summer was really very hot, and we were excited to fulfill the demand. But then somewhere in May middle, we couldn't
catch up.
So there could be players, there could be other brands who would have filled in that gap. But so therefore our growth was not more than the industry.
So that brings me to my next question. A golden summer and a rather golden monsoon. We've actually had a really solid monsoon, and rural India is now picking up. I know that your demand for rural India usually perks up in the festive season, which is very closely related to how well the monsoons have done. How ready are you in terms of fulfilling the demand that may come potentially from rural India in this quarter?
We are very well prepared, but I keep telling myself and our team that it is better to look at the long term rather than the quarter. For the simple reason.
Because this is not organic then, right? It is sporadic.
But then you will miss it if you are looking at the quarter. You have to look at what is coming in the future, how you have to prepare for.
Right.
That has been the DNA of Blue Star. That get the fundamentals right, you will perform definitely well. So you look at this, that more than 95% of the buyers are first-time buyers.
Okay.
And the penetration levels today are around 7%. It is expected to more than double going forward. Air conditioner as a category is not one per home, it can be multiple in a home. More than 55% this summer season bought air conditioners through consumer finance. 65% of the sale is coming from tier 3, 4, 5 town. More than 80% are entry-level products. And the 3-star, 2-star air conditioners account for close to 70% of the consumption. So in India, if you have to succeed, you have to have affordable products, and therefore we repositioned ourselves to offer that affordable. At the same time, India is a market where many things coexist. So you cannot ignore affordable premium or premium segments as well. And the next part is concerned with the channels itself. You have different types of channels coexisting. It will not happen in Europe or United States. You have single outlet stores, you have modern retail, you have got e-commerce, you have got distributors. All of this coexists today. And the consumers whom you are dealing with from different markets demand different things actually. So if the growth is going to be so much in the coming years, how are we going to innovate in order to keep the product differentiated in terms of energy efficiency, reliability?
And retain market share in that same.
That's right. Yeah. Our goal is to get to 15% market share, which should have happened.
You're at about 13.5, 14 right now? 13.9.
13.75. So we should have reached 15 by FY25. We are now saying FY26 we will reach there.
Mr. Thiagarajan, let's assume the units that we spoke about, the doubling of the market size itself, etc. Would companies like you need to innovate as a necessity in order to reach that 15% market share, or would that happen naturally because you do have a good brand? My limited point is, based on demand supply, you reckon growth is easy to get relatively, or would you need to strive hard on multiple fronts in order to be able to get growth and growth in market share both?
If it is a happening industry and so much of revenue to be earned, profit to be made, it's going to be fiercely competitive.
Sure.
So it's not the question of getting into playing 11. And then if you are a batsman, whether you are in that 5, and we are part of that 5.
Yes.
And how to get to 3. And therefore, you have to be very clear in terms of building your competitiveness. For that, product innovation is the first step.
Okay, the reason why I actually asked this more is because multiple notes say that they draw comfort from your strategy, and I don't know if it's a pivot, but your strategy of pursuing profitability and cash flows at the current point of time. So my question therefore is that would it need to be fiercely innovative in order to gain market share? Because usually companies which are working on profitability and free cash flow don't keep as strong an eye on the top line as on these factors. I know you will say you have an eye on all, but where is the first port of call? Profitability and free cash flow or market share?
So as I age and mature, I will wake up and go to sleep with this question. If you are serving the investors, it is profitability and cash flow leadership. As far as the consumer is concerned, whether your product is superior, it is reliable, you are providing extraordinary customer service, and it is coming at a price and value for money. That's how the consumer looks at it. So you need to first build that. For that pillar is very much important. The second pillar is about that if I have to ensure that I'm part of an industry which has to grow responsibly. Look, this growth, whether India will be able to provide power, when especially 50% of the energy will have to come from renewables, we don't want a situation. I had grown up in this industry for more than 4 decades that summer will come, there will be power cut and sale will be impacted. It's not uncommon for us to explain to the management there was power cut, we couldn't sell. We don't want that. If that is so, the industry will have to work harder. The third part is connected with what is the return that I will provide. It's a capacity utilization. It is the improved profits. Again, to provide great returns, you need to invest in R&D. The materials are not going to be easily available. Okay. Copper, for example, and steel, microprocessor. These are emerging industries. The component ecosystem is not yet complete.
Right. So, one thing that stood out for us was while you might have not gained more than the market in the last quarter, your margins have improved significantly. And I know you've talked about this for the last year or two where you're working on operational efficiency. Now, MEP in central air conditioning margins have improved, and so has it been for room AC and commercial refrigeration. For the rest of the financial year, do you think you could maintain the 9.5% margins, or am I being too ambitious? Because we've seen a big uptick from 6.5 to 8.5.
So the first thing is connected with scale. The second one is the value engineering, research and development related innovations with what had gone into. The backward integration initiative. These are all resulting in this. The margin guideline for segment 1 is between 7 and 7.5%.
For F5, for the rest of the year.
For the rest of the year. And we have said that it could be around 8.5% for segment 2.
Okay, so the average would be close to about 8% for the rest of the financial year.
That's right. Having said all this, we are also really concerned about. That's why I said that there is no point in worrying over a particular quarter. The geopolitical issues that are developing, it's a matter of concern actually.
You've invested extensively in capex, and like you indicated to us as well, you can't get your eyes off R&D, technology, digitization. That is the big theme to work with. How much have you earmarked for expansion this year, and how would you look to fund it? Because you've significantly reduced your debt as well recently.
Yeah, the quarter ended 30th June, we had surplus cash in hand.
Yes.
It's because of the QIP.
Okay,
so that's the last year we raised the QIP, keeping in mind that there is need to invest in manufacturing. There are investments that are required in research and development. There are investments that are required in digitalization, including machine learning, AI, etc.
So by FY26, where do you see capacity at? Because demand is not a problem in your industry. Now it's all about just playing catch up on supply side.
FY26, we would have reached more than 15 million.
Wow. I'm clearly very fascinated by your company, but thank you very much. So it's indeed a pleasure to have you in the studio, talk to us about Blue Star, the landscape, and like Sir said, it's a hot industry. You can't get your eyes off it. Happening and hot as well. We just had a heat wave behind us, but yes, very happening. The stocks have also been on the move. The earnings have been fantastic. The outlook also looks rather promising. And of course, Blue Star aspires to hit that 15% market share by next financial year. Well, a quick detour from Blue Star to the Adani portfolio. It's been a phenomenal quarter for the Adani group as well. Agam is standing by with more on that. Agam, growth on PAT, growth on EBITDA, and leverage is also reduced at a multi-year low. You want to take us through what the Adani group companies have done?
Well, there's certainly a lot of strength when it comes to Adani Group on group level basis, coming down to profitability. We have seen a good amount of growth. It's something that Chairman Gautam Adani had also suggested just a few weeks ago. Well, we are looking at, on a group level, your EBITDA rise nearly 33% at around 22,500 odd crores, a little over that. And consequently, your adjusted net profit after tax has risen by as much as 50% on a year-on-year basis at a little over 10,200 crores. Moving in, if you just consider the net debt to EBITDA coming in at around 2.2 times, this has come off substantially also. If you do remember, last year around, this number was somewhere between 2.5 to 3 times, and which means that we are in fact looking looking at this particular ratio coming off considerably. And this is, of course, also at a multi-year low. What's actually contributing to the EBITDA in general is, of course, the emerging infra business, which is under Adani Enterprises. That has seen a whopping 70% growth on a year-on-year basis to at a little less than 3,000 crores. And, moving on in terms of your trailing 12-month EBITDA, that's also up as much as 45% on a year-on-year basis at a little less than a little over than 79,000 crores. This can only give you an idea about the kind of growth that has come through in the last 12 months and what we can expect going forward as well with respect to the projections. Of course, the first quarter EBITDA for core infrastructure has accounted for 84% of your total EBITDA, and it is, well, quite clearly the largest in terms of contribution. Well, the Adani Group going from strength to strength, a lot has also happened through the course of the first quarter, and we continue to keep an eye on, well, the subsequent quarters as to what kind of growth we can see. But for now, on an operational basis, on a strong footing.
Thanks for that, Agam. Well, that's the long and short of the details. And remember, as we said, on a quarter which wherein the performance from India Inc. has been sluggish, there are a few companies which stand out, and obviously some of the group companies of this Adani portfolio feature in that list. Blue Star that we spoke to features in that list. Very select banking names and large names may feature on that list as well. What doesn't quite feature? Maybe IT, maybe some other staple names. What we'll do is we'll talk about all of this on Talking Point, which will be up next. For now, from everybody who put India Market Open together, thanks so much for tuning in. Thanks for tuning into Talking Point. I'm your host, Niraj Shah. And it's a flat day for the markets now, or flattened out a little bit, 0.22%. I mean, marginally off from the levels that we were trading at. But the Sensex clearly flattened out. And by the way, the culprit, or the lack of it maybe, but the culprit seems to be Nifty Bank, which is very, very flat, because Nifty IT is doing the hard work today again. 0.41% higher for the Nifty IT. Remember, this is the best performing index in Friday's session too. It was the best performing index for the week. And I think it's starting off well today. So if you look at the 7-day chart of either the Nifty IT for a week, about 5%, and some of the large constituents from a TCS to a Infosys, I presume all of those, excuse me, should be showing some upsides. There is sporadic gains today for companies in the hospitality space, for example. So if you look at Chalet Hotels, BLS International, GMR Airports, everything a lot of businesses connected to travel and tourism. Chalet's come off a little bit, but GMR and some of the others still okay. Though you would argue that most of these businesses seem like they've come off from the highs of the day. So that's one piece to monitor in the session. Then the capital market related plays. So 361 did okay, or is doing okay even now. I believe Angel One started off well, so that's the other one to keep in mind. And there's some strength in specific names, like for example NBCC on the con call has spoken very strongly about what they will do over the course of the next 12 to 24 months, and I think that is leading the stock materially higher in the session today, so watch out for that one. Triveni Engineering, and I think sugar stocks have been on a bit of a roll ever since this whole thing about ethanol policy change has come about, so that is doing okay. So that's a few things that you're going to keep in mind. The other stock that is in focus today is Shriram Finance, because a clutch of brokerages are very constructive there. And I get in my colleague Harsh for a very quick perspective on what HSBC, for example, is saying about Shriram Finance. Harsh, good morning.
Good morning, Niraj. As you rightly said, very constructive when it comes to Shriram Finance and Nifty 50 company. 20% plus upside from here, 12-month price target, of course. So a very interesting play of sorts. First off, what they're suggesting is the 2012 to 22 period, lots of hiccups, but now that is firmly behind Shriram Finance. They've come off from some of those woes that they faced, and they've overcome that speed bump of sorts. So that's one piece. The second piece is growth has been extremely strong. The merger between Shriram City as well as Shriram Transport has materially impacted the numbers overall. And now there is a larger focus with regard to where growth is clearly well above growth guidance, at least for Q1 FY25 Shriram Finance. Now, just in terms of how operationally it's shaping up, there's a positive as well out there. What they're suggesting is operational efficiencies will kick in. What you will start to see is as growth comes in, unsecured lending hasn't been a large focus, and therefore credit costs will be limited. And that is the other positive with regard to asset quality as well. Last off, just with regard to ROAs expected to be around 3.5%, ROEs expected to be around the 17% kind of mark, and they're valuing this at 2.1 times price to book FY26. So despite the 21% upside, FY26 valuations don't look very expensive.
Thanks for that, Harsh. Is it financials? Is it IT? What will lead the indices higher? Will the indices move higher from here? Fundamentally, post the earnings season being over, but being one more week closer to a potential Fed action. Mahesh Nandurkar, Head of Research and Managing Director, Jefferies India, joins us right now on the show. Mahesh, such a pleasure talking to you. Thanks for taking the time out. Niraj here, good morning.
Thanks, Niraj. Always a pleasure talking to you.
Thank you, Mahesh. How constructive or not constructive are you, considering that we've ended an earnings season which was ho-hum, if you will, but there is a large macro event on the anvil in terms of the Fed move?
Absolutely. I think there are a lot of macro events that have happened recently, and are could be a few more later part of this current calendar year. And clearly, in the context of where we have come in terms of the market movement over the last 1.5 years, last 2 years or so, which we have been very strong for Indian markets, and rightly so, in my view, given the pace of the economic growth, the relative strength of the economy, and on top of that, the strong domestic inflows that we are seeing, into the markets. In fact, the pace of the domestic flows is really the key driving factor that we've seen that has kept the markets at a higher level. If you look at the current calendar year, we are looking at almost $7 to $8 billion a month. That's the extent of inflows that we are seeing from various domestic sources. Clearly, a very, very high number, in my view. So keeping all these things in the context of high valuation, very, very strong domestic flows that we've seen in the last 7-8 months of this current calendar year, and the expected, changes, in the global macro, so to speak, I would say that the risk reward, at least from a short-term perspective, say from the next 2 to 3 quarter perspective, doesn't appear that attractive. The long term is obviously looking quite good.
Mahesh, even if the Fed moves and sounds dovish about policy, that you don't think that will be enough for equities to stay benign or constructive? They may not really rally too much, but you don't think even then it'll be good enough?
Yeah. See, the thing is, what we've seen. We have seen what happened to the global markets and Indian markets over the last 2 years, during which the Fed has increased the interest rates by almost 500 basis points. If you go by the traditional sort of models, a 500 basis point increase in the risk-free rate in the US would have impacted the US equity and the global equity quite negatively. But that did not happen. So I'm not so sure that we can really take a leaf out of the history book and say that if the Fed is going to cut rates, that will be benign for the markets. I don't think we are, clearly following the copybook style response from the equity markets to the potential actions on the interest rate side that have been taken by policymakers. So I would therefore say that from the next 2 to 3 quarters point of view, yes, Fed is definitely one. But then we also saw just a few weeks back, what happened to the Japanese market, right? Although it was a one-day, phenomenon, and a large part of the fall has already been recovered. But that just goes to show the vulnerability of equity markets to some of the macro developments, and therefore we should not be ignoring those.
Okay, fair call. Mahesh, just if one looks at so the argument that from a longer term perspective that you made is interesting. If I look at it from a perspective of the lens of sectors that have rallied and haven't, and then juxtapose it with the kind of commentary that the companies have given from within that sector, right? Where is it that you find within that landscape risk reward to be balanced? Because the problem seems to be that where growth seems near certain or possible, the pricing in is happening very, very swiftly.
True, absolutely. The markets have been moving very, very rapidly, as you rightly mentioned. There is hardly any time gap between an event happening, between a company surprising, and the stock prices reacting, in a very meaningful way. So from that point of view, I would say that the market is, really kind of, priced to perfection, and several sectors and several stocks, are priced, for that perfection. So that's my whole point. So, one of the earlier statistics that I mentioned of around $7 to $8 billion per month of domestic inflows. And when I say this number, I'm including not just the flows coming in from the equity mutual fund, which includes SIP and non-SIP portion, but also the single stock purchases by individuals, also by the insurance companies. And mind you, this number of $7 to $8 billion a month annualizes to almost $90 billion a year. That's roughly 25% of the annual financial savings of households on a gross basis, 1/3, on a net basis. Now, these numbers are actually comparable to what we see in developed world. 25 to 30% of savings going into equities is something that we see in developed markets. To that extent, I believe at least a part of the domestic inflows that we've been seeing appears, unsustainable to me. And now, what can bring it down to more sustainable levels? I mean, there can be, various events that one can think about, whether it is U.S. recession, whether it is, a possibility of some shocks coming maybe from Japan or maybe some geopolitical events. There could be some tax-related changes and so on. So as I said, it's very difficult to pinpoint what exactly might happen. But I would say that, from a near-term perspective, I see the risk that the domestic inflows might calm down, might slow down from the current levels. And while there will probably be some compensating factors coming in from the foreign flows, because those have been very weak, in general, the last like 7-8 months or even last 12 months or so. So that can be some compensating factor. But net is that, maybe we have to undergo some kind of a time correction, if not actually some kind of a market correction. But yes, after we go through with that near-term adjustments, I think the long-term appears to be quite attractive.
Got it. Okay, Mahesh, stay on. We need to take a quick break, a quick commercial break. We're back from the break and talking about some of the interesting pockets. I mean, as you've seen, IT continues to buzz. As you can see, some of the new age businesses, Ola Electric on a circuit yet again, Zomato up in trade. So some of the new age businesses doing very well. And Jefferies sees limited room for upsides in IT services at least. So we try and talk to Mahesh about some of these nitty-gritties of within this whole index benchmarks. Stay tuned, we'll be right back. Back with Talking Point in conversation with Mahesh Nandurkar of Jefferies. Mahesh, from amongst themes and sectors, I was looking at some of the research that you guys have published recently, right? And amongst the things that were done last week was this whole note wherein on IT, wherein it's talking about how there is limited scope for a positive surprise. You prefer TCS, Infosys, and maybe some of the larger ones. Now, why is that the case? Is it because the US economy is not necessarily firing on all cylinders, or is it because you believe that the surprise is also a factor of the price move that goes behind a stock, and some of these stocks have moved from the June lows?
Yeah, true. So as we discussed, earlier, the results coming in from the IT services companies for the June quarter were maybe a tad better, not a whole lot. And that kind of, that level of positive excitement got priced into the stocks very, very quickly, maybe, just like a few days' time. But, if one takes a step back and, move away from these recent up moves that we've seen, in the stocks and the results. But by and large, Niraj, what we're clearly looking at is the scenario where the possibility of a US economic slowdown is now more today as compared to what it was 3 months back or 6 months back. And that's why, there is this chatter about the rate cuts in the US. So, I, see that there is some element of excitement around the IT services sector due to rate cuts. But what I would say is that one needs to go one level deeper and see what is the reason why these rate cuts are being talked about, at a sort of, much more higher probability today. And the reason is that of an economic slowdown or a possibility of, or a higher possibility of, US recession. And those things are definitely not, that positive, a thing from the demand perspective. So that is, clearly, one thing to keep in mind. Secondly, now when we talk about the rate cuts, it usually impacts the financials and the banks, in the US in a negative way because of the margin pressure, etc. And BFSI segment is one of the large, is one of the large sectors in terms of the demand contribution to Indian IT services. So from both these standpoints, we don't really see any big reason to be too excited about. Yes, the IT services sector looks like a defensive sector. It is one of the sectors that hasn't really done that well in the last, 8 to 12 months or so. And there is that element of sector rotation that will probably be, playing out. And to our mind, it has already played out to some extent. So beyond that, we don't really see any big fundamental reason to be too bullish on IT services here.
Okay. What about some of the, not IT services, but tech-related businesses? Ola Electric's debut, or rather performance post-debut, is stuff that dreams are made of. Zomato continues to see some record performance for Blinkit and some of the others. And a lot of these tech-related businesses, right, PB FinTech. So I'm just using this as an example for viewers to understand. But Mahesh, I'm just trying to understand from you that new age tech or tech usage or companies which use tech to build B2C businesses. How do you see some of those? Because the market is now pricing them very, very strongly and very, very richly.
Yeah, that is true. But, we clearly like some of the stocks in this space, this e-commerce, this tech-enabled sectors, that you spoke about, in the food delivery, the quick commerce related businesses, because these are, ultimately the new segments, relative new segments, on the markets. And, in general, what I would say is that from the broader market perspective, the sectors that have done well, over the last, 10 years or so, need not be the ones that would, do, better over the next 5 to 10 years. Some of these new emerging sectors, be it these tech-enabled, the e-commerce sectors that you spoke about, or even some of the green energy or energy-related sectors, which haven't really done that well in the last 10 years. But I think some of those stocks have done pretty well in the last 1 or 2 years or so. And I'm going to come back to, our favorite theme that we have spoken about, which is the investment cycle, which is not just real estate, but other capital goods, infra, and so on. So these are some of the sectors that have already done well, on the markets in the last, say, 1 to 2 years or so. And maybe they are in for a breather. But if you were to ignore that near term, say 6 months to 12 months kind of a period, and if you focus on, let's say, 3 to 5 year period, I still believe that, these e-commerce related, these energy related, real estate and investment cycle related stocks and sectors that will probably do much better than the market from a longer term perspective. From a near term perspective, yes, I do see headwinds and a risk of underperformance there.
Got it. Mahesh, one final question. And I wanted to talk about financials at length, but there is paucity of time. So I'm going to focus on one particular subset of financials, non-lending financials, which is insurance. Now, past history would suggest that these stocks, if you look at it on a CAGR basis since listing, haven't really, I mean, yes, they've generated wealth, but not really created such high wealth that it deserved the kind of investments. Now, maybe the street was not quite adept at valuing these companies, has now grown adept, what have you. I would love to understand, how do you think of life insurance or general insurance as a pocket where you may or may not want to invest in?
No, insurance is definitely a sector that we quite like. The non-lending financial overall space looks attractive, but even within that, insurance definitely looks attractive. The other part of the NLF or the non-lending financials is the capital market related plays. Once again, the capital market related plays have done quite well in the last 12 months or so. And I do see some risk of underperformance going ahead into the next 6 to 12 months. But beyond that, the capital market plays should pick up once again. But in the interim, we definitely believe that life insurance, particularly as a sector, it's as a sector that should do well over the next 6 to 12 months. And I believe the sector rotation, which is also playing out to some extent, should play out in favor of the insurance sector here. So yeah, we are overweight on insurance sector.
Okay, overweight on the sector, and just extend that conversation, Mahesh, general insurance, because that seems to be a consensus. Life insurance, at least there's some people who are, some who are not. In general insurance, almost everybody seems to be constructive. So is this a multi-year theme, and should people investing in this really invest with the long-term view in mind, general insurance stocks?
I think both general insurance and life insurance appear to be attractive long-term themes for sure. There is no doubt in my mind. And in terms of the penetration levels, both sectors are at a low level at this point in time. And clearly the financialization of savings, slowly, the households are moving away from the attraction of gold and looking at, the other financial, investments. And, clearly, especially after COVID, the life and the general insurance segments have, become a greater part of an average, individual's portfolio. And I definitely see much better long-term potential for both these subsectors within insurance.
Got it. Mahesh Nandurkar, such a pleasure talking to you. Thanks for taking the time out. And this is somewhere around Independence Day. Hopefully talk once more around the festive season ahead of Diwali or around that. But thanks so much for joining in today.
Thank you, Niraj, for having me here. Thanks a lot.
The pleasure is ours. Well, that's the view from Jefferies. And on a note that it's been a sobering morning because it seemed primed for an uptick. Somehow it's flattened out completely, courtesy banks, which are dragging the indices slightly lower. But no alarm bells, just that the broader markets too are seeing a clutch of stocks which are correcting quite a bit. V-Guard is down, for example, 7%. Hinzinc sulks, another 4.5% down for that one. Kalyan Jewellers down about 3%. Jupiter Wagons is down about 2.5% lower. There's Carborundum, Schaeffler, Data Patterns, a clutch of stocks which are looking slightly wobbly. But with that, it's a wrap on this leg of Talking Point. Thanks so much for tuning in to the episode.
Nifty trades flat after a strong week behind us. The Nifty and Sensex both trade with marginal cuts. Hindustan Zinc extends its decline following the launch of an OFS by Vedanta. Stock slumps to a 3-month low, 20% low in the last few days of trade. Nalwala Electric continues its rally and hits upper circuit for the 4th straight day since its listing, crosses 60,000 crores in market cap. And the Supreme Court takes cognizance of the rape murder case of the Kolkata doctor. A 3-judge bench led by Chief Justice D.Y. Chandrachud will hear the matter on Tuesday. Hello and welcome to the F&O show. The next half an hour, Agam and me will take you through all the action in the F&O markets and strategies that you could execute. Well, the markets are having a bit of a break after Friday's strong rally. The Nifty and the Sensex keeping up with the rest of Asia, trading flat to slightly lower. So it's going to be a week where it's range bound with a positive sort of bias. So consolidation with a positive bias is what most traders are betting on for this week. Earnings are behind us and no major events are lined up this week apart from the global events that market participants will be eyeing in terms of Jackson Hole Symposium, where the Fed chief will be talking about the trajectory of the much anticipated rate cuts and the health of the US economy. Apart from that, you have the weekly jobs report that market participants will track, and you've got inflation data from Europe and Japan as well. The Nifty itself at 24,574, so there's no real positions being taken by traders on either sides. The breadth of the market's not too bad. The bias still remains on the upside as we see it. Across the broader markets, there is outperformance. The Nifty 500 trades with a marginal gain as compared to the benchmark itself. Interesting movers, you've got Kaplan that's up 9%, Godfrey Phillips is up 7.5%. Insurance companies not doing too badly. You've also got mid-cap IT stocks that aren't having a bad day either. Stocks like Birla Soft up and about in trade. On the sell side, Zinc is down once again as Vedanta extended and increased its OFS by 0.29%, bringing its total stake sale in Hindustan Zinc to 1.51%. Apart from that, defense counters are trading slightly lower, but all in all, Agam, it's a bit of a challenge to look for opportunities in today's day of trade, at least on the long side.
Yeah, you're right, Samina. And you know what? While we have conquered some important levels last Friday, it does seem like this Monday is going to be about perhaps defending those levels. So, and by that I mean the 24,500 mark on the Nifty and the 50,500 mark on the Bank Nifty. Well, at least as far as the constituents go, when it comes to the Nifty, I want to take a look at the contribution here. So we do have Reliance Industries, NTPC, and something like TCS and SBI. It's a very, very quiet and, well, I would say, a broad market in terms of diversification with respect to what's contributing towards an up move and what is taking away from that up move. For now, there's a very fine balance because on the lower end, on the losing end, we have M&M, HDFC Bank, ICICI Bank, and Bharti Airtel. So largely, it's a fairly quiet day of trade. I would say at least in the first 1 hour of trade, it's been fairly quiet. And when it comes to the Bank Nifty, let's pull that up as well very, very quickly. I was talking about 50,500, and while it has lost out from day's highs, we're still maintaining that mark. Actually, we haven't. We've lost that mark. So again, it's going to be in and around 50,500 for today. Now, let's pull up the futures and options space. And again, futures particularly, remember we saw unwinding last Friday. Today, that continues for the Nifty with a decline of around 1% in open interest. And when it comes to the Bank Nifty futures, again, that's where we are looking at,